I wish I knew that alone 5 years before I did. There's a big difference between filing your taxes and planning your taxes.
Guys, I'm sitting here again with Tommy Thornburg. Tommy, great to be here with you.
Thank you for having me.
Yeah, I've had you on the channel multiple times. I really love being able to share content with you. And we talk about, a lot of things that most people, I certainly don't really think about when you're doing a business, especially a real estate business. We have a lot of people that are doing wholesaling and flipping and other real estate investing, as you know. And tax strategy and business credit, some of these ideas tend to kind of get a back burner. And I hear you talk about like, hey, these are the parts of the business most people aren't really excited about, but super important.
For sure.
Right? And we're going to continue that conversation. In fact, we'll put some links below. Tyler, remind me to make sure we get these in there, but we'll put some links to these other videos because one of the big things that you and your company do is tax planning, it's helping with your entity structures, getting set up so that you can now operate a business where now you're maximizing the benefits of, the tax code and the protections and the things that you can get from having an entity and operating out of a business, right? And that's really important.
Yeah, one of the biggest expenses any entrepreneur, any 1099 contractor is going to have is taxes.
Yeah.
And the more that you can have a solid foundation to really grow and scale your business, I say this all the time, like no one cares about your money more than you do. Financial planners will tell you that they do and everything else, but the tax code is so large that the more you understand how to play the game of taxes, the easier it is to win. So set up the business the right way, bookkeeping, tax planning, building the business credit. You said it perfect. It's the stuff that no one wants to deal with, but it's really important in the longevity of your business.
Well, yeah, because as soon as you start to hit even a moderate level of success, you're going to start showing income, and that income now is going to be subject to tax. And so tax strategy and planning are going to become a really important thing. I waited until my tax liability was massive before I started to really tackle it head on, right? So don't let that happen. Don't find out once it's too late that you could have taken advantage of all of these benefits that are in the tax code. So on this video, Tommy, I was really hoping that you could share some of your favorite write-offs that if you have your entity, if you don't have your entity, guys, I'll put a link below where you can sit down with Tommy and his team. They'll do a free strategy call. They'll look at you, your goals, what you're doing. They'll even help you get your entity set up. They'll do all of that for you. You guys are amazing. You service like a lot of my students and customers in helping them with their corporate structure. But let's talk about some of your favorite or maybe things that most new entrepreneurs don't think about that are some great easy write-offs, some great tax strategies that if you just did a little pre-planning, kept track of some things, you'd be able to get these amazing write-offs in their businesses.
That would be the number one recommendation that I can give to anybody, even if you're just getting started, haven't done your first deal. Have a way to track your expenses. And everyone is a little bit different. People that are more detail-oriented, I highly recommend getting familiar with QuickBooks early. But if you know that you lack being a little bit more detail-oriented and maybe you're a big vision type person, just something as easy as a separate designated credit card for your business-related expenses. But one of the easiest ways to win at the game of taxes is death by 1,000 paper cuts. I hate the saying. Our CPA said it, it stuck with me. So hopefully it sticks with you, but you don't remember what you had for lunch last Tuesday. You're certainly not going to remember if it was business related a month from now.
At the end of the year, let alone at the end of the year. Yeah.
Right. So if you can break the calendar or break the year up into calendar quarters, and give yourself a profit and a loss. So January, February, March, quarter one, April, May, June, quarter two, so on and so forth. And once you do that, at the end of every quarter, give yourself a profit and a loss. How much did you make? How much have you spent? And that way, going into the fourth quarter, you can make the decision of, does it make sense for me to get a long-term rental? Does it make sense for me to make an investment into my marketing, into a software, into something that I know is going to help me grow and scale my business?
Because quarters 1, 2, and 3, where you're at with your taxable income, is what you're saying.
Correct.
Because if you think about it this way, I didn't do this. So prior to when I moved to Puerto Rico, which is a whole nother conversation because I got a bunch of tax benefit, I didn't realize how big my tax bill was going to be. And if I could go back in a time machine, I would have made a very important strategic purchase in the fourth quarter.
100%.
Because I could write the check to the IRS, which I did for $1.4 million.
Crazy.
Or I could have used that for a down payment on an asset or something else that would have also wiped out the tax, but then I would have something to show for it.
Oh, it makes
right. But I just was so
1.4.
Yeah, and I wrote the check. I was just, I know, right? I was just so in my business and just, I knew I was making money, but I just didn't really plan well enough.
Yeah.
And then next thing you know, we're doing my year-end books after January 1 for my, April 15th. It was too late.
It's too late. If you were working with us back then, what we would have done is we would have said, great year, Jerry. This is really awesome. But we're going into the third quarter. You need to buy a building. Mm-hmm. For some clients, it's more likely a residential property. But one of the best tax strategies that we've come across is a cost segregation study, right? If you could have purchased a building in the fourth quarter, done a cost segregation study on it to accelerate the depreciation, as opposed to 27 and a half years, now you're writing off the cupboards, the carpet, the paint, the things that aren't going to last 27 and a half years. And you likely could have cut that liability in half very, very easily with a little bit of strategy.
And actually had something to show for it. So what Tommy's talking about here is when you purchase an asset like a single family rental or an apartment building, whatever it is, the IRS tax code allows for you to write off a portion of what that property would depreciate in over time. So a cost segregation study is where, if you're buying a multifamily, they'll come in and they'll actually look at how you can accelerate that depreciation and take even more write-off every year sooner.
Correct. Yeah.
So it'll wipe out a lot of tax liability is why people do it.
Another huge benefit for a lot of you that are listening as well is it used to be a lot of multifamily, a lot of commercial buildings. It was a common conception that they thought it had to be a large building in order for this to make sense. But with inflation and with the increase in property values, we're finding a lot of benefit in single family residential homes over about $250,000, $300,000 to still facilitate these studies.
Yeah.
And it's saving thousands, if not tens of thousands of dollars in taxes.
More than pays for the cost of the study.
Oh yeah. 100%.
At scale. Yeah. So really cool. So I guess the point here is, guys, if you're following my channel, you're doing the strategies I teach, you're going to go out, you're going to do deals, you're going to make money. And that money, if you're wholesaling and flipping or doing any kind of transactional, which is everything I teach, it's great because you're going to make a lot of money really quickly if you're good at it. But you're also in that active income category on your taxes, which means you have to be thinking also about some of your tax strategy.
This is a great point. So active income is taxed between 10 and 37%. And it's great because you can make the money, you can reinvest, you can grow. I know you're a master at teaching how to scale a wholesale operation, but if it's that much more important to make sure that's where any active or ordinary income, that's where you want to write off your phone, your internet, your power,
gas, your vehicle, all those things. Yeah.
Pay your kids there, write off your house, take the Augusta rule that we were talking about earlier. Yeah. But then if you get to the third quarter and you have a great year, maybe it's a passive income. Maybe you get into a long-term rental at that point where passive income is 0 to 20%. So at the highest level, we got a 17% haircut and we can still take more of the deductions on the active side of the business. So
yeah, because if you don't know, guys, the IRS tax code is a tiered system. So when you said 10 to 37, right?
Correct.
Yeah. So as you go up in income, you're going to jump into a new tax bracket.
Correct.
So when I paid the 1.4, I was in that 37%, and that was just federal. Then I had the state on top of that, which they bumped that to 9. Yeah. So I was at almost 50%. It's 46 or whatever, 40. So it was.
Yeah, that 10 to 37 is just the federal. Those of you in California and these other.
Yeah, you're paying 15. In some of these states. So it can really add up. So But going back to, originally here, someone's just getting started. Let's say they're working on that first deal. They went to Prime Corporate Service, they got their LLC, they're doing things right, they're not transacting in their personal name, they've got some liability protection with an entity, and they go out and they start doing some deals. What things should they be thinking about automatically as stuff to track that they can write off, that if you don't keep good tracking of this and keep organized, you kind of might miss that opportunity for those write-offs?
So the tax code is over 70,000 pages.
We'll go by one. How long can we go here on this video?
I wouldn't recommend you read it unless you're having trouble sleeping. But a group of accountants and CPAs got together with the IRS and they said, this is ridiculous. Give us a little bit of guidance here, right? So these brilliant minds get together and they came back with 2 words: ordinary and necessary.
Ordinary and necessary.
I wish I knew that alone 5 years before I did. Because if we were to go to lunch, that's not necessary, but it's ordinary. People have business meals.
Ordinary meaning normal.
Anything, yeah, something that's gonna help you generate income. If it's gonna benefit your business some way, somehow, now or in the future, track that expense. Please hire a professional to make sure that they're looking over it for you, or if you get audited, they can fight it for you.
Yeah.
But when you're going through your day-to-day life, ask yourself that question: is this ordinary or necessary for my business to make it helpful for me to generate income long-term? And if you can say yes to that, track it as an expense.
So that could be clothing.
Yes.
That could be, gas to get to an appointment you have where you're meeting a seller.
Yep.
A portion of that vehicle expense, right? And things like that, your home office. All of those things are facilitating your ability to do the business. What about education? You're paying for education. Does that count?
Yeah, we want it to be a little bit different from we want that to be advisory or startup or organizational, because same thing, it's just the tweak, right? Education has limitations, or they want an accredited university. But it's little tweaks like that, and having a CPA that's familiar with what you're doing from a business standpoint that makes it 100% deductible.
Well, one of the things I love about you guys is you highly specialize in real estate investors. So you understand what wholesalers are doing and flippers, how they're transacting. And that makes a huge difference, because when I first started with my wholesaling business, I just found any old CPA in town. And then at the end of the year, they'd say, this is how much you owe. And I'd be like, man, isn't there something we could do? And
got to be a better way.
They didn't really understand the ins and outs of what I was doing. And then, you guys are very astute and attuned to what our business model looks like as flippers, to then be able to advise correctly on the different things that maybe you're not thinking about, and how to categorize correctly and track correctly. So that's huge.
Yeah, there's a big difference between filing your taxes and planning your taxes. And if you can plan your taxes on that quarterly basis like we've talked about, it makes it a whole lot easier, so that you don't find yourself in a position where you're paying over $1 million in taxes, let alone $10,000, $20,000. If you understand the profit, the loss, it makes it easier to keep it in your corner. The IRS says that 90% of people and businesses that get audited lose, 9 out of 10. And a lot of times it's just because they're going for the lowest hanging fruit of, are you tracking your mileage if you're actually writing off your mileage?
Yeah.
Are you tracking what you paid your kids for? Are you tracking any of these expenses? The 10% that win, it's because they have their ducks in a row and they say, no, here's the proof of it, here's the records, and you're taken care of. So,
man, I'm living proof of that. So I got audited in 2014 for 2010.
Yeah.
So they came to me and they said, we want to audit your 2010 tax return. So 4 years later, and they said you owe $42,000. And so the IRS agent meets at my house. She walks in the front door and she goes, wow, this is a nice house. And I'm like, I'm screwed. So we sit down and I say to her, what if I don't want to do this? And she's like, well, what do you mean? I said, what if I don't want to do this audit? And she's like, I don't know, I've never had this happen. Let me call my boss. So she gets off the phone and she says, if you just pay the $42,000 that we're saying you owe, we're done. So I said, okay, done. And I wrote her a check and she left and I didn't do the audit. And the only reason why wasn't because I felt like I owed the 42. I don't know what happened in 2010. I didn't keep very good records of 2010.
Yeah.
And I knew that I wouldn't win any of that argument because I just didn't track it very well.
What makes it so much easier now than 2010 as well, everything's digital. And that's why I say get familiar with QuickBooks, have a designated credit card. So that way you can go back to 2023, 2010, and you have the actual records for whatever year that you need. The tax clients that work with us, especially the clients that we do the bookkeeping for, we have all of those records. We have secured portals where we upload all of their tax returns so that if you want to qualify for a house, you log in, you have all the returns, you have all the expenses.
What about like 1099 or your W-9s,
Yep.
tracking all of that? Is that also, can you like keep that in? Because that was another thing I did really bad in the beginning was I wasn't very good about W-9s so that I could 1099 those contractors. And at the end of the year, I was chasing down, just running my business so in the moment that I wasn't planning very well for my year-end taxes.
All those things in regards to payroll, if you're paying a contractor, a landscaper, and it's over $600, you need to track it. And if you can issue them a W-9 so you don't have to deal with it at the end of the year, you'll get some pushback. There's going to be contractors, there's going to be landscapers that are...
I have a rule now where we do not pay the first draw to any contractor without the W-9
Love
first.
that. Love that.
Just because I don't want to chase it later.
If you help them understand you're going to bring more business back to them, they'll sign it.
Yep.
You'll have your record, you'll have your deduction, and that gives you your alibi at the end of the year.
Especially if you're clear up front about it. Being aware of these things, like you make it your business to know these things because that's your business. So guys, I mean, you could read all 700 pages of the tax code, or you could make sure that you're aligned with a good team that is helping you be aware of these things, making sure that you're taking advantage of the new codes that come out every year and maximizing. I mean, I've heard you say this before, Tommy. It's not what you make, it's what you keep.
Yep.
That's the main thing.
That's our plan, profit, protect your business, but remember, it's not what you make, it's what you keep. That is our slogan, and we're sticking to it.
So guys, like I mentioned earlier, I'll put a link in the description, but it's a link where you can go and you'll watch a little video there, but you can register and schedule a strategy call.
Yep.
And your team will sit down with them, really kind of break it open, understand what you're doing, what you're trying to do, what your goals are, and help you get these things going and organized. I think you guys even do where you can get your LLC set up if you don't have one. Get your LLC set up for just the cost of what it is to register the LLC and all that. So some really cool things there. You guys are also doing. We'll cover in another video maybe some business credit.
Yeah.
I know you're helping a lot of our clients go get business credit, and to be able to use that in real estate is huge.
Yeah.
So that's another thing that maybe we can talk about.
Yeah, we're getting over $4 million a month in business credit.
Business credit, unreal.
And corporate funding right now.
Oh my gosh, very cool, guys! If you want to see that, put a comment in the description, and we'll try to get some of that out too. But thanks again, Tommy. Appreciate you sharing these ideas, guys. If you have any questions, leave those below, and we'll see you on the next video.